How's it going, everybody? It's your friendly neighborhood stoner man here, and I got a fucking banger for you guys today. A lot of you already know him and love him. I'm here with the one and only Drippy Too Hard. Homie's in here to kind of give us an outline of how he plays the flow and how he makes that shit drip. So why don't you go ahead and introduce yourself, Drippy? What you got going on, man?
Hey. Thanks, everyone. Welcome. And thank you, Storyman, for giving me an opportunity and platform to you and Unusual Whales to just share my ideas. I'm an options trader. I use flow analysis, technical analysis, macroeconomic events, and just market structure to find option plays. I post my weekly swing plays on my YouTube channel, and last couple of weeks have been absolute monsters. Just this week, this month alone, every day has been like 1,000% runner. So I feel blessed, and we're just getting started. Just started this channel. A lot of educational content coming soon, and also a lot of flow reading. I post a lot of flow stuff. You can see here, everything about unusual whales, my strategies, my trading view setup, and everything else. All trading, all options. you know I'm all in this, and make sure you follow me on Twitter as well. I post a lot of plays. Today alone had pretty much like 5 or 6 bangers. Did in live space call. So yep, that's pretty much about me. Welcome everyone again.
And so Drippy's gonna kind of talk a bit about how he makes his setups and stuff. I think he's going to go through an older play with us today, and of course we can field some questions at the end if you guys have general questions about what he did or what he's showing you. I'll have my eyes on the chat for you, and yeah, we can run this through however you guys want. So I'm going to give the floor to Drippy and let him start partying this shit up, y'all.
Thank you again. So here I have the first trade I want to talk about is net, which is Cloudflare had earnings yesterday, and after hours, and I was expecting a earnings sell-off looking at the flow, and look at this. We literally got in at the top today. Market open pretty much, and just like captured the whole move. Alerted this on Twitter, and there were a couple reasons behind this. I mean, first I was looking already for kind of a place to enter a put position here. It was already extended, and my confirmation was yesterday night. I was looking at like the flow data, and I actually posted this on Twitter as well. So if you look here, November 4th was Thursday, and we have this time set up here. So I'm looking at yesterday's trades, and here I set this premium range to 50,000 and ask only, and I put out money only. So what I'm looking for, why these filters matter, is because I'm looking for a directional movement, in either direction. And also, I had my DTE range set to 15 days because I don't want to look at leaps or anything like that. I'm looking for short term uh, price movement. So last night I was looking at net flow, and I saw these like bearish activity here, a lot of puts here at the market close. You can see here, this one was right, at close. And these are bigger orders. They're not small orders, I would say. Like anything above $50,000, I still consider them as whales. So you can see here, it was as the market close was approaching, we saw a lot of bearish activity. And some of these were fifth, which was expiring literally today. So,
I
you
almost
know,
said tomorrow earlier when talking about today as well, because it doesn't feel like Friday, and it is.
yeah, it's almost, yeah, I mean, it's market close now, right?
Yeah,
So
we're
market has
10 minutes
closed.
past now.
Yeah. So, yeah. So, and if you also look here, net flow, and yesterday it was 48% call volume, and bullish premium seems like it was 56%, and the reason is that it ran 3% during the day. So you need to look at what's going on from a perspective of intraday, like at the end of day. So this was a sign for me, at least, to see that okay, well, looks like it might be sell the news. So let's hop on to today morning as well. Today morning trades. Let me go back to the live flow section here.
And when you switch back to that historical, when you do, if you don't mind, click that little arrow next to navigation to make that little sidebar for filters go away. That way, the flow itself or whatever historicals you're looking at fill up that whole screen.
Oh, you mean this one?
Yeah, yeah. Whenever you get to talking, that is.
Gotcha. Yeah, I'm just gonna change the time to today here, and change my settings here back to this, and I'm you know gonna change the time here to the morning, uh, or actually, it's better this way. Let's just cap it to 9:55, right? So just looking at some morning trades here, right? So now if you look here, these morning trades were like all calls, and there were some puts. So at this point of time, I was still this was until 9:53. It was in the morning, and around 10 o'clock, I think, if you look here at the chart for 5-minute chart, yeah. So you can see here this was 9:30. You see this run up here, and then I think entered the position around this area, which was around 9:40. So as the day progresses, we want to see what was the flow like. Now it might be bullish because people might buy leaps on this is like buy the dip for them. So it's not necessarily like a reliable indicator for you to just hop on just based on this information. You need to see the price action with everything else. And if you change this to 11 here, and let's change this to 10 here. So now let's look at here. So now you can see, like, I mean, there were like some big put orders here, and these calls are in the money calls. And in my opinion, like, if it's not out of money calls, these most probably are their hedges. And for someone who is shorting, they buy in the money calls to basically cover their position synthetically. And you know so this was around 11:23. You saw a big put position here. So if you look at the chart at 11:23, we had, well, it was around this area, around this time. So I was already in this position from this level, and one way you could have entered was to look at the flow and then verify and confirm, and then you could have gotten puts all the way down until 192. And I alerted on Twitter that my target was 195, and then if it flushes down, then it might go all the way to like 190. So it kind of retested 192 area. And then another thing to notice is that this is Ripster EMA cloud, and this was 5-minute chart. So you can see here that it got rejected from this leading EMA once here. This was a false breakout, and then flow confirmed that it's a bearish movement, and then again it got rejected here from this EMA, and then finally it just got a kind of like found some support here. And then this was one trade, and I think, so overall, you know if you look here from around 213, I covered half my position here, so it was a 16-point move. And then I still have some open put position here. So just letting them ride for next week.
And what are your general, just, for my curiosity, what is the general percentage gain that you personally start to scale out?
Right. I mean, this is a good question. So it depends on the stock, first of all, what I'm trading at this point. So if you look at net, right? And then one thing I always look before, scaling out or trying to find out what might be my profit potential for that day is that I look at this average true range for the stock. And in this case, it's $8 on a daily basis. So what that tells me is that one ATR is $8, and usually shorts start covering at 1 to 2 ATR if you're short, and if you're long, then you can see some kind of pullback around 1 to 2 ATR. So now going back here, if you see here, if we see from this point, uh, 8 points are around this area, and then you can see there was a pullback, sorry, there was this kind of like a bounce back here. So this was the first area where I didn't take profit here because I'm kind of used to the price action, and I know that I have more profit potential, but I alerted that this was a good area for taking profit. And then another thing I look at is these levels here. So you know in this chart I don't have levels mapped out because I have it on my Webull. But another thing I do here, which is very very important, is that I mark all these closing candles here. You see here, this is a support area, and this is a support area, because you can see here that there was some buying pressure, and then this wick here was definitely another, you can call it a demand zone, for example, where you see that buyers stepped in when the price uh, discovery was happening around this area. So now when you go and look back on the 10-minute chart, you can see here that this red line, which I just pointed out, acted as a support area, right? So this was your first level where you should have taken profit if you're just starting out. And this is a great trade in itself. This move from 10 point move in literally like 5-10 minutes. And then another entry point was around this, when you see that this support area was broken, you could have entered here as well. And then this demand zone here, if you see here, it didn't even give it a chance, fell through, but then it retested this area again. So it did retest this and then failed, and then again moved down. So all these levels, they matter a lot, and I have them marked. Like literally, I have it marked, all of them. This one in my Vivo platform, which I use primarily for charting. Apart from TradingView, I like to clean my TradingView because I'm watching the raw price action. This can get gobbled up here pretty fast if I add all my lines. But yeah, so I'm looking at two charts. I mean, same chart. I'm looking at Weibo where all my levels are marked from. Like I also do this on every time frame, like 2 hours, 4 hours. I try to map out. Like I already have these support levels here from last week calls and stuff. So that's pretty much my process when I'm doing intraday trades. I before even taking a trade, I have all these levels marked. I don't enter a trade without having levels marked, even if the flow is super bullish or bearish, because I need to know where to exit, where to enter, and stick to my plan. And I need to create a plan, you need to have first these levels in place. So yeah, so the way I take profits is either you look at how much volatile the stock is, and depending on that, I first I adjust my price target, and second thing I look is also at the volume. um, I'm looking at this relative volume here, and you can see first 5-minute chart, first 5-minute candle here, and you can compare it to last couple days here, and you can you can definitely see that this first 5 minute candle, this one. So this one, yeah. So this was the day where it was a strong volume day, but then you can see how first 5 minute is weak. But then here you see this huge candle. So this was another sign for me that like this is definitely looking bearish. Uh, and I had my flow with me, which was telling me it's a bearish move could happen. I have my volume here, and next thing I'm looking at is just like basic price action and like just looking at the tape to see where the buying pressure is and if the bids are stepping up or ask side is stepping down. And I saw that on the tape around this area that ask is actually stepping down. So what that means is that sellers are aggressive to sell, buyers are not aggressive to buy. Had it been the other case where buyers are stepping up and let's say that the bid was above 208, then then that was the time for you to get out completely of the position. So a good let me just clean this up a little bit. So a good approach in my opinion, if you're a beginner, right, like, and let's say you haven't traded this stock before, I usually don't recommend beginners to trade puts on a stock like net on their first trade, because it just you're gonna tend to make mistakes and stuff. So it's just better to take profits fast. And it was Friday on top of that. Fridays market makers just like mess you up by manipulating the price up and down. um, I'm trying to find the arrow here, so give me one sec. Yeah,
Someone
so
goes Friday 11 a.m. rule, baby.
oh yeah, so another thing I want to talk about is the 11 a.m. rule. So what 11 a.m. for 11 a.m. first of all is Eastern Standard. So what that rule is basically that if a stock is in uptrend or a downtrend, and after 11 if it's just continuing the trend and if it makes a new high or a new low, uh, then chances are the trend is going to continue whole day. So look at this chart now. Let's look at 11 a.m. today. This was around 11 a.m. You see here, you see that right at 11 a.m. you saw the buyer stepping up. And no way, there was in my mind there was no way this is going to recover after such a huge sell off, right? So this was a good entry for a short position. And you could have entered here, and then ride the wave down all the way until here. You could have entered here. And another way how I hold my positions for longer is that I look at 11 a.m. and I see that after 11, if the trend is continued, in this case it did continue the trend. It was around the low of the day, and then boom. Another example, let me share from one of my other trades. For this was Nike, right? So in this case, now look at Nike's chart for today. This was around 1040, it made a new high, and then ever since that time it didn't make, trend didn't continue, and that was the high of day. It didn't reclaim this level. So this was your time to get out. Let's say you were holding calls, and this was also a critical level because it's 179. So using both these in mind, you can get off your position. And let's say that you wanted to buy puts. This was a great entry point. So one very simple strategy I use there at 11, if a stock is an uptrend, you know you can start your put position and scale in, because most definitely there will be selling pressure. And the reason is that European markets close and some markets open around 11 a.m. So just a critical time. Time is the level apart from support and resistance. So yeah, and like, let's look at the other day, for example. um, let's pick this day, for example. This was, go to the 5-minute chart here, right? So if I speed this up, and this is 9:30 a.m., and you can look here, Nike is making that move to the upside. I'm gonna speed this up a little bit more, and now it's approaching. It never broke down the CMA, now it did, and it's approaching 12. You know, and now this was, let me pause it for a sec. Look at the time here, around 11 to 11:15. It didn't make a new high, and then there was a selling pressure. Now later in the day, it continued to make a new high, which was a very bullish signal. But the 11 a.m. rule is pretty much this: that at 11 you should be cautious if you are even long or short, because there is a high chance that there will be some kind of selling pressure or buying pressure depending on if you're short or long. So yeah, that's the 11 a.m. rule, and it has worked like well for a lot of people. Like a lot of people you are using this now to you know to either stay in a position or get out depending on what's happening. So I use that all the time, and yeah, that's the 11 a.m. rule. And oh, do you want to see any other trades, or what? Do you have anything in mind?
We had one other question from the homies in the chat. Somebody did mention something you tweeted out about a 230 rule as well, if you wanted to tag on that.
Sure, yeah. So the 230 rule is basically that, let's say that a stock like this example right here. I mean, no, I don't think this is a good example because it works for stock in a downtrend. So let me try to find an example here. Give me a sec. Gonna have to find an example. Let's see. Oh yeah, DXN is a great example, right? So yeah. So we got in
Oh, that's
the
perfect.
DXN. Sorry, what?
Sorry, that's the chart's just perfect for what you're trying to explain right now. It got me a little excited.
Yeah, it's perfect. Yeah. So yeah. So now look at this chart from a daily perspective, first of all. You know, so we were in the calls yesterday. So let me just quickly tell you what's going on. It bounced off from this EMA, and there's a huge gap here. So these two things keep in mind. And then let's go back to the 5-minute chart for yesterday. Now, this stock was, you can see here, it's kind of in a downtrend whole day. So ever since it created this high, been in a downtrend, and then around market close, it around 2 o'clock, it tried to kind of like make that reclaim this level, but then it didn't happen. But around market close, you can see here that it made a new high. So the rule is basically that if a stock is in a downtrend, let's say from 11 a.m. or whole day, for example, it doesn't matter if it's 11 a.m. or whole day. If it's in a downtrend and around 2 o'clock, 2 p.m. Eastern time, 2:30, doesn't matter, around this range, you see buyers stepping in for a downtrending stock, and you see it close above the high of day, or you see it approaching high of day and closing around that area, there is a very high chance that next day it is going to run. Now, one thing to keep in mind is that next day it's going to run doesn't mean it's going to be a trending day. What it means is that next day, very high chance that it's going to open and then run up. So that's what happened here. It gapped up, opened, ran up, and then there was some sell off. But luckily in this case, it went all the way to create a new high, all the way to like 195 level. But yeah, so that's pretty much the rule. I'm trying to find more examples here. So for example, let's say Apple today, right? Now, this is not the example which suits this criteria, and the reason is that you see this in a downtrend, which makes sense. First thing, yes, it's in a downtrend, so first check mark. Around 2 o'clock, you see here that buyer stepped in, but it never reclaimed the high of day. It was not even close. It's not even 50% of that. So the 2 p.m. Rule doesn't work in this case. In this case, it doesn't work. Let's look at Boeing. Let's look at RCL because that was a good example from the other day uh, when it did make that move. No, it's not this one. Wait. Yeah, it's not RCL. I'm trying to find a good example for 2 p.m. rule. Let's see if it's Costco. I did share that one of these days. I just can't figure out what time it was. So yeah, this one. Now look at Costco for this day. So the market opened around this time. Yeah. So the market opened around here. This was the open 494, and it was in a downtrend pretty much until 2. And then 2 o'clock, you see buyers stepping up, closed around the high of day. So this was high of day, and this was around market closed around high of day, and next day it ran up. And very similar thing next day, you know. This was 9:30. I mean, this was I think day before. So this was another case which was a trending day. So here the 11 a.m. rule applies here. So if you look here, uh, around around 10:30. Yeah. So this was 11 a.m. right? And let's say you were not in this trade, you were not in Costco. You check 11 a.m. and by it happens that you're watching Costco at 11, and you see that the trend is intact. It's making new high after 11. I think it's safe to assume that you can enter a position here, and you can manage your loss against this support area, and then you can enter a position, ride the CMA all the way, and then sell on the break of the CMA. And this is a pretty nice profit, like on a Thursday for Costco, 6 point move would lead to decent gains. I would say like 50 to 60% on your option premium, depending on which one you're picking. So, you don't have to be in the trade forever. You can use these simple rules to maximize your chances of success on a scalp also. So I've used this strategy for a long time now. I mean, in my terms, long time means like like 1 to 1.5 years, and I've back tested this data as well using Thinkorswim, and the accuracy is more than 70%. So in my books, that's good enough for me. There is a 90% chance after 11 a.m. if the trend isn't continued that it's going to make a new high.
That's really awesome, Drip. Thanks for doing
Yeah.
that work for everybody too, doing the back testing and looking at that data over time. Um, would definitely be interested in hearing more about that in the future. Right now, there's a shout out in chat to you. Uh, Drippy, Drippy, you didn't call it, but I was up 400% on DAL today thanks to learning from you how to scale in and out of trades, working on my risk management and sticking to the strategy. Thanks for teaching us how to fish. Absolutely
Awesome,
love
man.
to hear that.
Wow. Thank you so much, man. And yeah, I mean the chart looks, yeah, if I were to enter this, I think this would be a good area. This dip buy here, you know, you see this strong move here. I would have entered around break of this area, and strong. Yeah, I mean, congratulations. It was a really nice trade.
And there were a
Um,
few questions just kind of on the Drippy origin, if you will. Drippy, how did you find unusual whales? A friend, Twitter? Do you think the tool has changed the way you pick your tickers, or is it more of a confirmation bias?
oh, absolutely. I think. I mean, like, let me. I think there are a couple of questions there. So let me answer. How did I find? So I found it on Twitter. So the I I was a contractor uh, for basically a friend of mine who has some kind of similar service in India, and he has options data, and he wanted me to kind of analyze or create some kind of software for Flow, but not as sophisticated as unusual whales. But so this is where I got into flow analysis. Like, so the majority of part was just like creating algorithms for analyzing the data for flow. And if some folks are new here, my background is computer science, and I love like programming. So and that's how I got into flow analysis. And then for a long time after that, I was obviously that project was done, and I kept thinking about like I should use this information for my own trades, because at that point of time I was using options flow data to trade equity. I was not trading options. So I was just looking at stocks like Neo, Tesla during the January rally. I was just like using the flow data from this guy, and also from other services like CBOE has something called Trade Station, but which was way too expensive. I think it's like $300 or something per month, and it doesn't really have half the features of Whale. So yeah, I found Wales on Twitter, and I dropped him a comment as well. I don't know if Whale remembers, but I dropped him a comment that like this is by far the best options flow analysis tool I've come across, and this was coming from someone who has worked on this stuff. So it gives you so much data that you can create different strategies based on that, and that's what I like about it. And I don't use Whales only for confirmation, but I use Whales for finding setups as well. So for example, like my setup, my strategy, I've shared it on the Twitter. I don't know what's happening. Can you see this? My window just paused for a sec. One
Yeah,
second.
it did.
Yeah, let me. Yeah, okay, now it's better.
Beautiful. And
So,
so, just to clarify real quick, some people were asking about some of your trading view setups. I just want to point out that some of the charting you saw so far was the Webull charting.
no, that's trading view.
You had mentioned
What?
Webull earlier, I mean.
Right. I
Somebody
use
asked
Vivo.
which EMAs you have set up for your levels there.
Yeah, great question. So, like, if you go to my playlist here on my YouTube channel, there's this trading setup playlist. So this playlist has my like all the settings you need. So you can just go here, hop on, and just literally you can copy everything. And I do have a premium membership for this, so you might not see like a volume profile and stuff like that. But if you have premium membership, you can just copy everything, and you should be that video should be um, a good starting point for you. And if you have any other question, you can always tweet at me. I will happy to help, and I can create more videos that will help you. Um, with respect to the EMAs right now, it's like Ripster EMA, which is this one. So uh, so it's like 8, 9, 5, 13, 34, 50, 72, 89, 180, 200. This is the setting. So if this is being recorded, you can check it later. And I think I haven't messed around with this. So this is the default one. Um, I didn't change anything in this as far as I remember. So that's the EMA cloud I'm using.
Thank you,
Yeah,
Drippy.
no problem. Yeah, so going back to the Wales thing, I think, yeah, I was saying that I use Wales for a lot of things. I think uh, finding setups is really, really important with respect to flow. And one underutilized feature is like, this watch list section here, which I use a lot. I have created multiple watch lists. For example, this was for extra unusual, right? So what it does is like it has already, I have my preset filters here, and it already finds the extra unusual ones for me. So you can see here that Nvidia has a lot of bearish activity, market close. So what this means is that I'm expecting, I mean, this was 5th, so this is pretty much like today. But you can set the DTE to 1 here, which basically means that date to expiry is not today but after today. And here it's not showing me any uh, trades, which is fine. Sometimes you don't have big orders, but I use this a lot. This one is volume greater than open interest, premium 50K, and bullish. So you can see here all these are volume greater than OI. So I use this feature a lot. This is how I start scanning at the end of day, trying to find setups. And you can mess around a lot actually. Let's say that it can get noisy here because Tesla, Amazon have a lot of contracts because these are highly traded stocks. Highly liquid stocks on the options floor. So the way to avoid that is like, you can set the strike range to 200, for example. So that removes everything, like a higher price stock like Tesla and Amazon. And now you can see for Disney and Lucid, so many calls here. And these are for 12th. And you can see this is a really bullish activity going on here at the market close. And then if you look at the underlying, that's 41. So it's not out of money, but it's still an important information. And you can always put out of money here. So that way you can get, so now you can see here even more filtered information. And for Mara, you can see this. Now this is highly unusual because underlying, not highly unusual, but still, like, you can see here that this one is expiring on 26th, 65K order. Now this itself is not a big order. So what I do now is I open this and then I look at the bullish premium. First thing I do is I look here and I see it's 52%. So for me to be really, really bullish, I'm looking at anything greater than like 70% or 65%. But you cannot just discard based on this information. But this is a good kind of like my workflow. Basically, this is what I do. And then now, if you look at here, bigger orders, you can see that mostly these are sold calls. So it's not significant activity for me to like conclude that this is a directional move. But if you look at EXPE, for example, and if you look here, EXPE, you can see this is 65%. So this is really bullish. And look at the call volume here. 10.5K is the 30-day average. And this is 96,000 contracts. So this is 9 times. That's 9,000%, 8,000%, if you calculate through the difference. And so this is something I'm interested in now. I'm looking at this. Call volume is high. Bullish premium is high. Call to put ratio is not that significant, like 0.25, 1/4, which is pretty good. I mean, these might be sold puts here. And then next thing I do is I look at today's levels then. And you can see here, this is the retail money, minimum premium 1,000. Then you can see this is the, what is that, 5,000 orders. And then you can see 15,000 and you can see 30,000. All of them are bullish. And then you can also see what strikes. So these are targeting, whales are targeting December. And they're targeting November 19th, which is next to next week. And the contracts are out of money as well. 180, 175. And then here it's 160. So these are in the money. And then these are in the money. And then you can see, obviously, as you approach the retail money here, you can see that retailers obviously are buying out of money calls because, that's how the pattern is. Retail always buys out of money calls. Whales always buy out of money calls, closer to the money calls, and also high, further expiration, because the bigger the money is, more the risk is for short-term movement. So that's how I understand and evaluate everything. And next thing I look at is so far I've broken down the flow for today. I've broken down my thought process. Next thing I'm going to look at is the chart of EXPE. And now I was already in this trade. So those who took this with me, we were in this trade since yesterday, and it moved overnight I don't even know how many points at this point, from 156 to 182. Mind blowing, right? And yeah, so
Man, that jump is just impressive to look at.
what's that?
The jump there, I just love looking at those.
Oh yeah, it's just amazing. Like look at daily chart.
Insane.
And
Damn.
can you believe this? We were in this around this year. Like
Beautiful. Good shit, Drip.
yeah, like $2. We had 167.5 calls for $2 2.8, so $280, and I sold at peak for 1,500 one contract from 2 to 15. That was amazing
Oh,
for earnings play. So earnings IV is high. So yeah, that this was just killer, man. And the next one was TXN as well. I mean, this one was again, I think around 800%. RCL, it just gapped up today. Same thing. We were in this trade yesterday, day before yesterday. We were around this one. Had 95 calls, 97 calls, and look at this, insane moves. So, uh, I mean, one thing I really like in whales, unusual whales, apart from just looking at the flow stuff, I really like to go here. If you go to navigation here and look at the uh, uh, sector flow, it's like an underutilized feature in my opinion. I really look at this a lot, and I take screenshot every day of what's going on in, like, I have my screenshot for every day, and what I'm trying to figure out is that where is the money moving. So here I see that technology yesterday, if you look, it was plus 40%. And I also note the call volume as well. So like hedge funds and big money always move money around unless it's like a crash or something. So you want to know where the money is flowing, and the best way, in my opinion, is to look at the flow, options flow as well. So I'm looking here, and you can see that industrials had 100% more call volume. So this is getting me curious now. So I'm gonna
wow.
go here. Was that?
So, just real quick, our homie Snorlax in the chat to the EXPE end.
Mm-hmm.
He started noticing flow, it looks like in mid-October,
Oh
and
yeah. Oh
yeah,
yeah.
this one I'm showing the homies on the stream right now what I've got up. This massive multi-leg order of 8,000 contracts, a
Yeah, you're
spread
right.
here for a total. It looks like the calls bought were 4.9 mil, calls sold are 4.1. That's huge. So yeah, it
Yeah,
looks like between what you were saying, the warning signs are there. That is a roll down. And Snorlax just did that as well. Roll down and
yeah, Smart.
closer.
I was following him as well. I don't know him or her, but yeah, like I was following, and I was also watching EXPE, and I think I also commented on Twitter that because I was long on EXPE, and exactly I saw that flow long time back. So one thing to keep in mind is that whales, they start putting orders 2 to 3 weeks before the move is happening, in my opinion, because they want to also get the money from the IV increase as retailers start to follow, right? And I saw this for EXP couple weeks back, and the problem a lot of people do is like they jump in immediately when they see it, and that's the biggest mistake which I learned personally. Just trading every day, utilizing the flow data, and the right way is to wait for the dips. Like just buy all the dips. For example, EXPE, right? When I saw that huge order which you're talking about, it was around this level. It was around this level, and let's say that you jumped in, you might have made profit, which I did for some calls, and then I got out of this area. But then again, you see this earnings sell off here, pre-earnings, this was the right entry spot for you to at least place some orders, and then next thing you know, you have this. So keep that in mind. This is a very, very critical thing, right? Like, don't just jump in. Like, a lot of people right now are talking about snap flow, right? We all see for Snap, like bullets coming in every day. We see like for PayPal and Snap. If you look at the live flow section, you can see hard money calls. But do you should observe that what is the expiration for those? Because those let me pull this out real quick. So yeah, you can see these are 75 calls for this was on 3rd, and this was expiring 19th, right? So this is also a bigger order. These are all big orders here. So did the stock go to 75 yet? No. What's the strategy? Wait. Wait to get in when you see the breakout happen. You know, First thing I told the other day on Twitter was that I am looking to buy Snap at 51 area. So if you go here, the 5-minute chart for Snap, and the reason was simple. I gave this explanation on Twitter as well, that you see this wick here. This was post earnings sell off, by the way. This was on the day when earnings announcement happened. And you see this? So this is where all the buyers were there. And you see this huge wick here. So that means there were some unfilled bids here. So I was waiting to get in around this area because this gives me some confidence that, I can see that there will be buyers stepping around this area. And this is what happened. So the other day we got in around, this was 28th of October, got in around this area, and then pretty much banged on this one. I think everyone on Fintech was so bullish on Snap, they lost so much money. Other traders as well. I know this because I saw this all the time. But the only way to play these is to wait for a breakout. Now if you look here at the Snap chart, right? I'm sorry. Yeah. Now what would be a good entry point, if you're trying to, let's say, go long on Snap? If you create this simple wedge, you can see here clearly. Wait for the breakout of this level. You see, this is the safest place you can be. This can act as your support. It has been rejected from this area 3 times, and then this one is even better. So sure, you can miss out on 5 points, but you can also lose all the money by just going long randomly. Let's say that you were to go long around this area, you still have a lot of money to be made, and your probability of success is higher because now the breakout is confirmed. In this case, the breakout is still not confirmed, but in my opinion, next week we'll see some kind of breakout happen if the market is strong, and then we'll see very similar to how TXN was. You see how many days it took for it to rebound. TXN also had bullish activity, 14 days here. Same thing with Facebook. If you go look at the daily chart here for Facebook, people started buying calls, whales started buying calls around this area, and it dipped more. And I think around this area was where I to kind of go long on Facebook. And then I've been kind of trading this intraday, still not sure, but now it's looking like it's about to break out. It's above these EMAs. So it's a really good setup for going long now. And now you can use the flow to see what targets, like what are the whales target, right, for the coming week. One
And
sec.
speaking of that flow,
Mm-hmm.
Lousy Day Trader asked if after this explanation you'd be willing to share some of your favorite filters that you've set up.
Sure. Yeah, I don't mind it. Yeah, I love sharing filters. What was I talking about though?
You had been discussing Snap not being ready to break out.
All right, I was saying that Snap had a bullish flow. Like if you look at one sec. Yeah, if you look at like Snap open interest here, I mean you can see here all these calls were worthless today, and then like these calls went worthless. But then if you look here for next week, you can see 55 calls are in play. You can see here puts are in play. So use that to find what levels do you think it might go to. On a Friday, you need to be aware market makers will try to kind of pin the price in between those levels. So for max pain, uh, Anyway, so filters, yeah. So let's talk about filters for a sec. So when I talk about filters, there are two. First is alerts filters, and second is live flow filters. I'm gonna talk about live flow filters because that's what I use most. And one of my favorites is this one. At the end of market close, like basically market close every day, what I do is I, of course, set the time to today. I set the premium range to 50,000, and then I set to ask only. Then I change this emoji to, I don't, like for indexes I have a separate filter, but right now I'm looking at equity only. And then I'm looking here at 15 days to expiry, and then I change this sort by premium, and then I change this to out of money. Sometimes I would do sweep only as well, but not always. So now what I have is, I'm looking here, and first thing I see is Disney, and Disney has earnings coming up. 180, underlying is 175. So what do you think is happening here? Someone is buying our money calls, and this is a $6 million uh, trade.
She ain't a
So
minnow.
what's that?
It ain't no minnow.
Yeah, it's not. Yeah, it's this is not a retailer. And now look at this premium, 71%. So this is the kind of setup I'm looking at. 90,000 is the average volume. 300,000 contracts traded.
And what's
And
beautiful about that too is this historical page that you're looking at is one of the main things I use. If you guys look at what he's talking about there, if you can highlight the call volume for today with your cursor.
so let's look at what my mind, right? That might help others as well. So first thing I'm looking at is this number, and then this number. So average of 30 days is 90,000, and today it's 300,000. So what I'm trying to find out is what is the relative. So same concept of stock. When you see stocks, you see that, oh, the relative volume is high. So it's the same concept in options volume as well. This is my primary, indicator. It gets me curious at least. And the next thing, of course, I'm looking at the bullish premium. And the reason why I don't really look at call premium is because someone can sell calls or buy in the money calls, or someone can sell puts. The best way, in my opinion, is to use this because this calculates the bullish premium from the sold puts and also bought calls. So this gives you a better indication, uh, like the premium for directional movement. And the next thing I look here is at the chart, of course. So my go-to settings are bullish premium and bearish premium. And now you can see here that the bullish premium is peaked today. So you're looking for these peaks here. So what I'm looking here is the price movement with respect to these peaks, and just close off the bearish for a second. So only bullish premium. So what this chart tells me is that in how much time I'm expecting a movement to come. Now earnings are a separate case because this is earnings play, but let's say it wasn't earnings play. So I'm looking at just like how much time it takes for the movement to come. And like, you can see here that, let's say this was the spike here, and then it took a couple days for the stock to kind of make high. So, and Disney is kind of a stock which doesn't move a lot unless there is a catalyst. So you won't see peaks here on the price, like the price chart here. Another thing I look here is that this bearish premium, this overall premium for today, which is also a good indicator in my opinion. If you see here like some squeeze towards either bullish or bearish, strong indication of move. But in this case, looks amazing. Now, next thing I do today's breakdown, and look at this. You cannot get better than that, in my opinion. This is a perfect example of why unusual whales is so important. Now, what are these? These are bets being placed on Disney earnings. I mean, the stock right now, if you look at the chart for Disney, it's at 175. The earnings are on 10th, so we have 5 days for earnings. It just broke out of this wedge. I apologize for the mess here. Let me just clean all of it. But it just broke out today, right? Very similar to Starbucks today. It just broke out of this channel. So, you know, very similar to UAA earnings. Look at this. For this is another trade we took based on the options flow earnings play, very similar to what we are seeing for Disney. Like UA had directional flow. So now the measured move here for 180 is 2.6%, right? Now, next thing I do is, I'm looking at this. So that's great. This looks all bullish. This is not normal. This is not normal. 16 million orders is not normal. So what I do now is I go here and
Somebody asked real quick if you're doing the daily or hourly candles.
for
I imagine the chart you had up
this is a
on your
daily
trading
chart.
view. Yeah.
Yeah, it's a daily chart. Yeah,
Thank you.
I don't trade on hourly. Like my go-to is daily, week, and for swing trades, I look at daily, and then I figure out my levels. Supply zone. I look at volume profile to see where the sellers might be. So what I'm expecting is that on the earnings day, it might go all the way to 185, or if its earnings are blockbuster, it might even you know these gaps can be filled fast, like on a after hours, because there's like not a lot of activity here, or they can be rejected here because a lot of sellers are waiting around this area. So I use that to figure out levels daily, and then I use 5 minute for intraday setups, 5 and 10 and 15, depending on how far are we into the day. I switch to 30 minutes after 1 hour of market open. Yeah. So
Somebody
anyway, going
asked
back.
how you read volume profile. So can you just kind of touch on what you mean when you say that?
Sure. So let me find a better example. So look at this EXP now,
I
right?
really love how TradingView lets you line it up on the right like that.
Yeah, I know. I mean, I had to change some settings for it to work like that. But maybe EXP is not a good example right now. Kind of gapped up, kind of filled all the way. But let me find a better example for intraday. Yeah, for example, Apple, right? Now look at Apple's chart. Uh, this is the point of control. What that means is that this is where at this price level, the most shares were traded for, I think, whatever the average is. I think it's 14 days. So last 14 days, or whatever the accumulation or average time frame it uses, this is the point of control, and it's above the point of control. So that's good. That's bullish. And then second thing you're looking here is that now if you look here for Apple, it got rejected. Like let's go back couple days, for example, here. Oh, sorry, it's a replay feature, right? So let's say that you were watching Apple and you are at this level. Now you're thinking to go long or short, and you didn't have volume profile. Now, like, how would you know to go long or short, right? So one thing you can definitely see is that this supply area rejection here a couple of times. So volume profile kind of helps you figure out that supply area accurately. And you can see here that, so this is where I'm assuming that first time it comes here, the price discovery happens here, you will see some selling pressure on this area. So if you were long, this should be your exit signal. And now let's play this. You can see here that it's just consolidating. here around this area, and then kind of like, hovering around this area, and now it's looking ready to kind of retest this. This is a great setup in itself because um, the dividend date past us, it's sitting on the volume shelf. That's what traders talk about, this volume shelf. This is the shelf which we are talking about here. And if you look at the support areas, now you can see here that if the selling pressure is strong for Apple, you see this here, it dipped down, and then you see buyers stepping here around this area, this gap here. You see this wick here. So this is where you will see buyers stepping in, and then it kind of went, retested this area, and then went again. So fresh supply and demand zone is a volume profile, kind of helps you identify that, apart from just wicks, these wicks. So right now Apple is looking really good. Like, just looking at the setup, the premium for Apple is also bullish for last couple of days. It's just waiting to break out. Definitely, you know um, so that's how I usually approach the volume profile. If you have any other question, feel free to ask. But I
One
was gonna,
person did ask, is that a fixed volume profile? If so, what is the time frame?
yeah, it's a fixed volume profile. I think the settings, uh so loop back period is 200, so I'm guessing it's 200 days. Number of bars is 500. So the default setting for volume profile, whatever this is the loop back. You can read the description here what that means. Like, if you want to keep yourself updated, you type VP here, and you can see where is volume profile. Oh yeah, it's here. And then you go here, click here, and it has all the information for what everything means. So number of bars is, so loop back is 500 days, and then bar length multiplier is basically like to make the size of that longer or short. So in short, this is basically calculating 500 days. In my settings, this is 500 days. And I don't change the default one. It's just the default for me. So sorry, it's 200. Sorry, 200 for me. So that's what the default is. So if you increase this, you will see the change here on the wall. Yeah. So I don't think it changes a lot for Apple, because Apple is a highly liquid stock, but for some stocks it might. So you can read about it. There's description online. I might be wrong about some things, because I'm looking at the fundamentals of what, I don't really care about the actual values that much, because most algorithms are using the default ones, and so far it has worked out for me, so I don't change it.
Hey, if it ain't broken, don't fix it.
Exactly. If it's not broken, don't mess with it. Just use the default. Everything should be default by default. Uh,
Be default by default, baby.
yeah. And then one more thing I want to show. Now, this is the new cool feature. Like, I think is super important. Is that I'm utilizing this every day. Is this, you can see this is a spread, and now I want to see like what this whale will lose or gain.
I'm glad you brought that up because one person did specifically ask if you would be sharing how you use this. So this is beautiful. Thank you.
Yeah, no problem. Yeah, I was gonna share it. I just want to make another video as well. I just didn't get much time, but I'm gonna make. Maybe Disney is a good example for it. So let me walk you through this real quick. So here you can see the ticker. You have the price. You can see here open interest for put and calls. You can see put call ratio, volume, this basic information here. This is critical, bid ask spread, because I like to stay within 10%. Anything above 10%, I'm not gonna, I'll be cautious. I don't want to pay too much in the spread. IV, I'm looking here is like average IV is 33%. So now I'm looking here at the IV here as well. for the trade itself. And you can see it's 36, so it's 3% more, which is not bad. Anything above 60 for Disney I would consider it to be a little bit worrisome for me to enter, especially around earnings. So a lot of these whales enter a week before because, as the earnings approach, the IV is going to start increasing. So, you need to keep that in mind when you're placing your trades, that if IV is going to increase or decrease. So in this case, let's say you're going long with naked calls, your IV is going to increase because the earnings are coming up. More and more people are going to buy these contracts, and the IV kind of is basically a telltale of the premium being priced in. Think about it that as a parking lot on a Sunday night, right? That, you know, on a Sunday night, the more people are parking, the higher premium you have to pay. A very similar concept here. The more people are purchasing contracts, they're parking their contracts, the more premium you have to pay to get in. This is a simple way to think about it. And so now look at this trade here. It clearly tells you this is an unlimited gain, two leg strategy. This is what I like. I want unlimited gains, uh, but and limited loss. This is important. So this guy knows his true risk because he knows it's a limited loss here, and he knows what the loss is. He or she or whoever. So this is a credit spread, and you can see here the net credit is $9 million, almost 10. Max loss for this guy is 391 million. Doesn't It's 391K or 391 million? Oh yeah, it's 391 million because it's a credit. It's a credit. It's not a debit. So you can have max loss as well. But uh this is the most important thing I look is this one. So let's zoom into this. So what this tells me is this trade is being shown here on this chart first. You can see here the date, you can see here max loss, you can see here profit, you can see gross value, everything. I'm looking at max loss mostly, and then you can even move the date to based on your expiration. And here this trade is going to expire in 13 days. So this is literally the most bullish bet I've seen on an earnings call in a while, because they don't buy 14 days expiration, $9 million, $16 million. And then the way to think about this is that, if the price is going to be 177, this guy is making profit. It's like you can see here, this is all profit. So a very easy way to think about this. The spread is a directional spread in positive direction. So that means they're expecting the price to go up. And, you can see here, this table kind of gives you an estimate how much this person will make depending on where the price is. So let's say that it's $180 by November 11th. Then you can see here that this person has made 2% of the money. And then you can also calculate profit here. So you can see here the amount of money this person will make. So as we approach 181 level, you can see here the max profit is $14 million. So this is not like a child's play. This is a big bet. So someone knows something. And the loss is of course contained here. Let's say that this stock drops by 1% by November 16th. This guy is willing to lose $4 million. So yeah, that's how you look at this. And the way I think about it this is that I'm not gonna jump in immediately on this trade. After I see this, I'm gonna still respect the levels. I'm gonna still find a good entry spot, and that's how you succeed in look at this now. It got rejected from this volume point of control. This right at this volume point of control. So today, you can see here. Yeah. So now tomorrow or whenever I either I will wait for the break of 167 area, or I will wait to buy dips around the CMA support here, which is 175, which is also psychological. And there's this gap here in my opinion, Phil, because this is a breakout. It's basically pre-earnings breakout. And next thing I do is go to Twitter, and I look for Disney, and then I'm looking at all the news here. You can see a lot of free information, share charts from paid services on Twitter. So that's the best way. You can see like other traders are talking, and you can also like, there's a Snorlax here, and then, just see latest news on it just to make sure, um, if there's any news broken out, or keep yourself aware of what's happening. And then finally, I go on Google uh, Trends, and then I look at Disney here just to see like what like is the trend increasing, because holiday season is coming up. More and more people are going to be excited about going to Disney World, and I think a better option is to do Disney. So that way, yeah. So I mean, it's pretty much flat. Sorry, not flat. So yeah, past 7 days, you can see here chatter. So there's not really any trend. Doesn't need to be. And
Someone in chat mentioned like a Disney parade news or some shit.
yeah, or something like that, which is relevant to the stock, I would say. So here you can see there is an uptrend here for the stock interest over time. And you can see in 90 days here, it's increasing now. So it's a healthy sign. And then another thing I look here, I go to the flow section, so let's say go to Disney, and then I look at the Disney page itself. So this page kind of gives you all the information in general about what Furu Flow is talking about. I mean, you can literally see the whole Twitter activity here, so you don't need to go on Twitter and look for what your favorite traders are talking about. I'm not on this right yet, but I'll join soon, hopefully. But yeah, so you can see here the number of mentions here, and when the peak was, when the trough is, and stuff like that. You can even go in depth. I think, yeah, you can see here. I mean, Cheetah Warrior is talking about um this. I think you can even go in depth. Yeah, well, there's a lot of information about a specific stock. You can gather information. It's all about doing your research. This is creating a conviction on your trade that there is no bad sign per se.
Yeah, one thing I really like about the socials, and I think it's underutilized, is for the unusual blog, we use, stuff that shows up in chatter quite a bit because that's part of it, right? Like the psychology of a stock. If people are talking about it, if it's getting traction, if that meshes up with flow and with the financials or the TA, that's a pretty good bet that you can see something happen.
Yeah, I mean, you can look here, right? The chatter started increasing. All the it just crossed over. I mean, right here you can see that, and then over the year you can see it's kind of declining, and you can apply TA on this as well. So this looks like about to break out, right? Just like the chart. So look how beautiful this is. You see the chart, like, same trend here, and this breakout. Wait, this is the stock price or the stock chatter? Uh, which one is it?
I think the lines, let me pull it up on my screen too, just so I can see it a little more clearly here. I think the lines show both.
Yeah, I'm guessing it's both. Yeah, it's the stock price, I guess.
Yep, you're right.
Yeah. Yeah, anyway, I mean, like, you can still kind of get information on like the in
And then it looks
general,
like the mentions are on the bars on the bottom, if I'm not mistaken.
right? Oh, okay. This is the mention. Okay. So yeah, you can see the mention increasing. I don't know if it's the stock volume or mention volume, but either way, I think, this uh I mean, I look at this one more because this is the mentions per day right here. And you can see that day before yesterday, sorry, this is 12/7.
Nope, it looks like it is the stock volume correction there.
Oh, okay, yeah. Yeah. So, I mean, anyway, you can look here. The chatter is kind of you can see here as well. Um, so just like farmer story, this is how you create a conviction on a stock and just play it that way. I'm gonna look at Disney as well because like this is one of the stock I will now add to my watch list because I did it live with you guys, and I like so far everything is matching for me to you know get inside a trade, start scaling in, and then just watch the price action every day from here on. I just add it to my watch list.
Y'all just got a live watch list party.
Yep, that's how we roll.
Fucking love it. One
Any other
person
questions?
one person mentioned Facebook, but I don't want to take too much out of your evening here, but I do want to point out the homie's username. Drippy Too Soft.
Thank you. What's the question?
He just wanted you to take a look at Facebook, I believe, and
Just
when you'll
take a
get
look
out
at.
of your trade.
Oh, when did I get out?
Yeah,
Like
yep.
today's
Or
talking
when
about
you get
today's
out
trade?
100%, I believe.
Oh, okay. Well, I believe the person is talking about.
Your daily lotto, it looks like someone else pointed out.
Yeah, yeah, yeah. Okay. Yeah. So this was market open. I think around 9:30, and my levels were. You can see here that this 340 and 345 were my. I alerted that, right. And look at this pattern here. So I had all of this in my other platform, and you can like go and look at my tweet histories. I told that 346.34 is my 3436 is my pivot. That should be the profit taking zone, and like this is where I alerted that phase about to pop out. And the reason was that you see the surge in volume here, and then this setup here is the reverse falling wedge. Basically, that falling wedge didn't fall down, it's falling up. That means it's a really bullish sign, and it's about to break out to the upside, and that's what happened here. And this is a surge in volume here, and this is where we entered around market open, like place calls here at 342 area, and kind of sold around this area, and alerted it couple times that this is the pivot. So if you're not taking profit on a Friday on a lotto, especially on Facebook, which is in a downtrend, I mean, I don't really know what to say. To be honest, you need to take profits. That's what I keep telling, like, on a Friday, you have to. And, this was a perfect execution, in my opinion. Got out at this spot, got in around this area. This was also consolidation for a while. Like, let's say that you were not watching this wedge, you can consider this as ascending wedge, ascending triangle breakout. It was holding this EMA well, and then breakout. This is exhaustion, and then you just get out. You could have gotten out break of this EMA well. So
And
yeah.
real quick, do you happen to have any, just before we shoo everybody out and let you get on with your night, do you have any recent examples of something that didn't move in the direction you expected it to?
You mean like in flow wise?
Or like flow or any TA you'd done that kind of went the opposite direction that you expected.
Like a trade which didn't work out?
Yeah, like something that lined up but still didn't quite go the way you
Oh yeah, I
expected
mean
it
like
to.
Apple is a good example, I would say. Like if I look at the Apple's flow was bullish going into today. Like if you look here, flow history, you can see it was 61% bullish, and the other day was 60%, right? And Apple didn't move much the last couple of days. So I mean, these could be leaps, right? But going into today, I was bullish on it because the setup was looking good. As I told you, you know, like if you look at the daily, you know, here, this one, I already told you like the whole thesis about Apple. I was expecting it to kind of break 152.5 and to the upside, but so this was market open. Where did it go? Yeah, here. So if you look at today's open, right? So I kind of called out for 152.5 call, but then you see this harsh rejection here. So 152.5 was this pivot as well. So this was where I started kind of scaling out a little bit, and the rest of the orders I put break even, stop loss because it's Friday. Yeah, like I can get back in because I have margin account. I don't like it's okay. I can lose a couple cents on contracts, but uh, it's better to be safe than sorry on Friday. But next thing this was a huge wake down, and then it didn't work in the favor, and I got stopped out. So I got contracts around. Let's see. So around where where did it open? Yeah. So it opened around this area, and I got contracts around here. Then it created this wick, scaled out a little bit here, and then kind of put break even stop loss, and then it kind of just dumped. So this is the trade which didn't work. And I could have put a stop a little bit further down as well. I don't mind, like this POC could have been a good stop area. And you can see here that it kind of retested this POC here and then here again. So yeah, I mean, like this trade didn't work out, and the key lesson here is that to minimize your loss. uh,
Absolutely. Manage
like,
that risk.
yeah, you need to the best approach in my opinion if you're a beginner is to uh always have break even stop once you are in profit, take some profit and then keep the rest break even. It's okay that you're not making big gains, but you're not losing anything. And that is the key. You should not lose anything. Getting $5 or $10. So that's what my thinking is. And this is a lesson learned in a hard way, but now this is my strategy I use all the time. I can lose 10-20 cents a contract. For me it's fine, but on a Friday I just keep it break even. And this was my first trade, and my I don't like when my first trade is a losing trade, so I just keep it to break even, and then the rest of the trades were all profit.
That's smart. Plus, it helps keep that psychological level in your head just to stay neutral mentally. Because if you lose that first trade, it can definitely like get to you if you let it. Like, so you gotta that break even rule. I think is really smart because then if it goes up a little bit and then starts falling again, you're starting off basically at net zero from where you started. So you don't have to have that potential mental drain of I fucked up right off the bat. Instead, you're like, okay, that's fine. I'll reevaluate, move on to the next one.
Yeah, my first trade rule, like rule of every trade I take every morning, the first one, my rules are that I keep break even stop once it moves in my favor. And second thing is I size down significantly than my normal. My first trade is always lower size. If I'm wrong, I want to be wrong fast and not lose a lot because that will definitely mess up my whole day. And usually it happens that on a Friday first trade, one or two trades, you end up losing or break even, and then you kind of understand the market structure, and then you can place bets. Like the other trades we made today, SU for example, like it broke out of this 26 area, and someone made 1,000% on a lot for 26.5 call. Like we alerted around this area and it broke out. And then same thing with Facebook. I already told you TXN, and then net. I told you like we entered around here. Yeah. So um, yeah, I think net worked out in my favor immediately. So another important lesson is that I added my position at 213 area here, and that was it's like 2 or 3 contracts for next week. And then I added a heavy around, like when I saw this, I added more. And then when I saw this rejection here, I added more. So I scaled in and also I scaled out at the same time. I mean, this is a little bit advanced for a lot of folks because I know that some people don't have that kind of flexibility because they have PDT rules or they have cash. But you can just play with one contract at a time, and then learn how to scale. And another thing I
Absolutely.
recommend,
Learning and setting that up is the very
right?
first important thing you got to do for sure.
Yeah, exactly. And also you can have a paper trading account side by side, so
Highly
you can,
recommend doing so too. Highly.
right? Yeah. So that way, like if you have a paper trading account, at least you can scale in and out with any number of position size you want, just to understand the basic trade management of what sizing in and sizing out or scaling in and scaling out means. And once you kind of nail it down on a paper trade, you can move towards real trades and you don't have to lose the real money. I know the emotions are not the same. I'm not a big advocate of paper trading, but with options, you absolutely can lose a lot of money. So either you start with one contract at a time and don't play lottos. Like it's people just assume that it's going to work in their favor, the trade, and 90% of time the opposite happens in options.
Yeah, absolutely. Safety first, learning first, and that way, if things start to go south, you'll have that wherewithal to take a step back and reevaluate what you've been doing.
Right, you don't want to end up with like a bag holding the bag and
Right, and
because your
always
whole
scale
weekend.
out. Let a couple sit there if you're profitable, and set a profit take if it starts reversing. But yeah, be safe, manage that risk, listen to drippy drip.
Drippy drip, exactly. Yeah, yeah. I mean, like, I'm a bit tired now, so I think like be a good time to kind of stop. But
Yeah,
if
we'll
any
go
other
ahead and
questions,
wrap this up. Obviously, thanks for coming on, man. This was really good. It looks like the chat really loved having you here.
awesome. Thank you.
And so, real quick, I'm going to go ahead and plug some drippy links in the chat. I highly recommend all of you, first and foremost, follow him on Twitter. And that is that second link. And that first link is his YouTube channel. He's got a lot of stuff in there. He breaks down plays on his YouTube channel. He also has his trading view setups on YouTube. He's got some risk management information on YouTube. So check that channel out. Drippy, is there anything else you want to plug? I know you do once a week, sometimes with exclusive trades on Twitter. Do you want to shout that out at all?
Oh yeah. So every either Thursday or Friday morning pre-market, we start around 9 o'clock. We go over what stocks we are watching, general market, trend and what's going on. Just nonstop commentary on options and a lot of useful information today. I think we gave out free plays whole day. A lot of people banked on both of our calls, and it's just like a fun way to kind of end the closing week. I mean the Friday, and just like trying. We all are trying to learn from each other. Exclusive is very focused technical stuff and making his levels right. I am focused on flow and macro and technical, kind of like a mixed bag. So I try to learn what he has to share, and I'm sure that he learns something from everyone, people asking him questions as well.
For sure. I went ahead and linked his Twitter in there as well, so you guys can check him out. That exclusive tradings, the spaces that Drippy hops on now and again. And I caught your guys' this morning, but I was multitasking. But I was there when you guys called out SU.
Yeah, it was fun, man. Like, let me show. It was really fun because like people just like went crazy, man. Like if you look here. Yeah, so you can another thing you can do here is ask me about tickers. You can just search using this. So I shared this chart last night, 19 hours ago, and I gave all my thesis here. And then, we were just playing SU today, and like I kind of alerted. Yeah, so you can see just like my non-stop tweets here. I keep tweeting everything like
Yeah, you're
full.
very active, and that's great because it lets you
Yeah,
mesh in with that community as well. It lets people know that you actually,
yeah,
you're paying attention, you give a shit.
yeah. I pay a lot of attention. I try to answer every question, as long as uh, you can just like follow me there. You'll realize yourself. I'm trying my best to kind of like balances out trading and education. It's all fun so far.
Perfect, man. Appreciate you. Appreciate you coming out. Appreciate all you folks for coming out and listening to the drip drip on us. He's got all the knowledge. Definitely give him a follow both on YouTube and on Twitter. And stay tuned for more. We'll have, guests on here once or twice a week from now on. And I'm willing to bet that you folks would love to see Drippy again in the future. So I'll peer pressure him a bit. How about that?
Yeah, for sure. And make sure you sign up for unusual whales. If you're not, you don't have an edge right now in option market. Use my code drippy2hard and you get discount 5% off. And just it's super cheap, guys. Like you can make that amount of money in just a day, not like 30 minutes.
And make sure
Just
you learn the flow as well, because we don't want you
yeah,
just YOLOing money at shit. So make sure you
right.
learn, get comfortable before you subscribe, and then after that, subscribe and keep learning from people like
Yeah,
Drippy, guys.
right. Subscribe and then just subscribe to my YouTube and then question you have. I'll make a lot of more videos on OPC, my strategies, everything else. Just trying to set some things up right now for my YouTube studio, but I have a lot of educational stuff coming out soon. So yeah, just keep in touch with me and Stoner, man. Everyone else in this whole community is just so helpful. Like I think this is probably the one of the best communities on FinTwit in general. So just guys, I really appreciate everyone helping out each. It's just like amazing to see it.
We appreciate you, man. Thanks for coming out.
Yep.
All
See
right,
you all
everybody.
soon.
We're going to wrap her up here. I'm going to go ahead and yeet you guys at a random channel. A random channel. A random channel. It doesn't look like any of our other partners are currently streaming. So yesterday we went ahead and raided a craftsman that was doing some fun arts and crafts. Let's see what we got. Does anybody have something nice to raid? Anybody got a friend or something that's just kind of hanging out? That random channel was wild, you're right. You know what? There is... So I think this guy is actually just playing marbles right now, but I've seen him around. I haven't talked to him yet, but he's also a trader on here. And so I'm just, you know what? We want to support retail, homies. So we're going to support retail. Let's go give trading stocks a shout out. Let's show him a little love. Hit him in the chat. He's got, I think, 40 people hanging out with him right now. Let's make it 340. What do you say? Fuck it. Fuck it. Let's yeet it. Fucking ship it, homies. Be respectful. Be kind. We're here to share love with retail, not be dicks. Let's send it. Here we go.